What's up, Pod Pals? It's your buddy Adam, and you are checking out Podcasting Business School. This is the show where I teach podcasters how to love their show like a hobby, but build it like a business. And one of the most important parts of business is your accounting and taxes, and having just a little bit of knowledge so you don't royally screw this up. I know a lot of you are new entrepreneurs, you're solopreneurs, you're forming LLCs, you're having bank accounts, business bank accounts for the first time. It's a intimidating world. And I can tell you when I graduated college and I started making money as a personal trainer, I'm getting that first tax bill of like $7,000. I'm like, why do I have to pay so much money? And then learning the lessons that unfolded from that. I can tell you what my good pod pal Heather Zeitzwolfe is going to deliver to you today will pay off big time for you all, because she's going to get you set up proper. So Heather's one of my favorite pod pals. She's amazing. She's got a show called Get the Balance Right that you need to check out, especially as we enter tax time. So Heather, welcome to Podcasting Business School.
Thank you, Adam. Thank you so much. And you're mentioning some key little things in there that I want to address today. So thank you so much for having me on the show.
Well, let's dive into your journey a little bit first. Everybody has kind of their own podcasting hero journey. So, obviously you're successful in what you do. Why the heck did you decide to start a podcast?
I started a podcast because I had a coach that I was working with that said, you need to get on podcast. And I was like, okay, well, why don't I just start a podcast, and then I could, then I could be on other people's podcasts. They could be on my podcast. And I thought I love to learn. So I thought this would be a great opportunity to interview people and learn from them. So I wanted to focus in on creatives as my niche. And I thought, I should just interview creatives and then learn about their business, because if to service someone's industry, you really need to know more and more about their industry to really understand how you can help them. So that's what I did. So that's where it all started.
That's the origin story of Get the Balance Right. And you're having a blast. Like, it seems like you really enjoy it. The show is doing really well. Like, what's your favorite part about podcasting so far?
It's meeting people. It's definitely meeting people. It gives you this excuse to tap somebody on the shoulder and be like, hey, hi, I'm interested in you. And by the way, would you like to be on my podcast? And I don't just tap people on the shoulder. Like, you get to know them, but it's this great excuse to be able to pick their brain for like 45 minutes that you would never be able to do otherwise. Because I've done informational interviews with people, and people are so nice. Like, if you ask them for an informational interview, I've never had anyone turn me down. But this is, it's kind of like, what's in it for them? Like, maybe they might want to help you out, but in a podcast, it's kind of like a win-win thing. You're helping them out, they'll help you out. And I've met the most amazing people through podcasting. It is so cool.
Yeah. Yeah. And it's like when you're kind of going through your content topics, like today's topic is a great example. We've known each other for like a year now, at least, or maybe it just feels that way. But like, we've collaborated, we interact a lot on social media. And I was like, oh, I really need to do an accounting and tax prep, because that's like a big deal. And a lot of people screw that up. And like, Heather's the perfect person for that. So it's like, you just fill that need for my audience, and we can collaborate and come on here, and it's going to be a great episode. So I want to talk about a little bit of like low hanging fruit to kind of kick off the conversation. And for me, I feel like one of the initial things that new entrepreneurs and solopreneurs need to know is, what is the difference between doing business, quote unquote, as myself versus forming something like an LLC? Like, what is the difference? Why is that important?
Okay, so I think we need to actually back up a little bit more, because that can get complicated really fast. So I want to just kind of lay some groundwork before I answer that
Let's
question.
go for it.
So your podcast talks about it's like a hobby, but treat it like a business, or build it like a business.
Right.
So that's really important to kind of think about. Is this podcast, is it a hobby or is it a business? And if it's going to be a business, you got to treat it like a business. And one of those things could be forming an LLC. And, when we start monetizing, we have to remember that even those gifts, I'm putting in air quotes, we get like through Patreon or whatever, those are taxable. So if we're going to start monetizing, we have to think, okay, how are we going to organize this, plan this, and get this prepared for taxes? And so if you want to kind of think ahead and be proactive, you can think, okay, I want to set up an LLC. Now, if you do that, a lot of people just think like, oh, I'm going to set up an LLC. They think like, I got to have a lawyer involved and do all this stuff. And it's not expensive. You can just go to your Secretary of State website and do it yourself. It doesn't take a lawyer, but you may want to read all about it first before you do it, because there are some things that you could get into a snag, like if you start it with a partner. So an LLC is great if you're a single member LLC, you sign it up, you can get a bank account under the LLC's name, you can get an EIN if you start. An EIN is from the IRS. It doesn't cost anything to get that number, so that number can be associated with your LLC. And that allows you, like if you get contractors, then if you give them a 1099, instead of putting your social security number on there, you put your EIN. So it kind of establishes you more as a business, and you can go to get a, like I said, a bank account, which is super important. You want to separate your business from your personal as far as your business goes. But so the LLC is important. So I do want to just like say one more thing about that partnership thing, because I've seen a lot of people get in trouble. They're like, oh yeah, let's team up together, and let's just think like, oh, we're podcasters together and let's just go start a partnership. Well, they don't know that like once you start doing that, then you have to file partnership returns and it can get really messy fast. So be careful. And this is not tax advice. Seek out a lawyer and a CPA. I'm a CPA, but I don't know your individual thing. So I'm just sort of putting the thing out there. Be careful. So an LLC can give you a level of protection, but there is also this whole thing of like, if you get loans under your name, and like there's a lot of nuances. So it's not necessarily going to hold you from being brought into jail or like be very careful.
Right. Now, what about like tax implications of like, all right, I don't have an LLC. I'm just Adam out there and people are paying me directly. I put it in my personal bank account versus forming an LLC, having a business checking account that all the money flows through. Just from a taxable perspective, like how much more are we paying by not having a business entity?
Okay. So when you are a single member LLC or you're a sole proprietor, you can be taxed exactly the same way, which is on your 1040 as a Schedule C. But if you are an LLC, you have other options. So like I said, you could be a partnership, but further down the line, you could be taxed as an SCorp. And so an SCorp has its own, as its own little things you got to know about, which can get kind of complicated fast. And I'm not going to go too far down that path. But basically, the idea is that you become an employee of your business. And so you have to have a W-2. You have to pay yourself what's called a reasonable wage. But what's really great about that is the money that's left over, the profit that's left over, you don't pay self-employment tax on that. So that can be a huge tax savings. The other thing is you can have healthcare that's run through it. You can have like a 401k that runs through it. And so you start to think about like, okay, what are the things that an employer can deduct and then as an employee? And so you're the employer. So there's all these great tax advantages to becoming an S-Corp. But I've seen people get into this way too soon. So if you're thinking about like, oh, I want to save a bunch of tax, talk to a CPA, let them see what your situation is, because there are some definite headaches about running if you are taxed like an S-Corp, because like I said, you have to have payroll. So you have to pay for a payroll service. You have to file a separate tax return for an S-Corp. There's lots of rules around it. You don't want to break rules when you have an S-Corp. So just make sure that you know all the things before you jump into that, because I've seen people jump into it too early. They couldn't afford to pay themselves and they just got into like a world of hurt. So just be really careful, but it can save you lots of money.
Yeah, I've had both. I ran my gym as an S-Corp. Currently, the whole podcasting business school brand is an LLC. I talked to my friend Evan, aka Vanator. I think he said that when he noticed that he likes to nerd out on taxes and things like that, and he's like, if somebody's profiting over 50K a year, they should just take a peek at being taxed as an S corp. That's kind of a litmus test that he put out there. Like, if you're doing that kind of profits, then take a peek at it. You may be able to benefit. Talk to somebody that knows what they're talking about.
And we're talking about net. We're talking about net.
Yeah. So, okay, obviously you are an accounting professional, tax professional. Like, you deal with this all day, every day. What are some of the most like screwed up, easily fixable things? Like, what are some things that we like just need to know right off the bat? Don't screw this up. I see people doing this all the time.
Yeah. So I have an acronym POD. So it's plan, organize, and declare. So that's my acronym. So part of it is planning and putting things in place. So having that business bank account is like one of the easiest things to do, and people screw this up. So once you open that up, just use that for business. Don't be, buying your groceries with, money from that. And if you need to pay yourself, do a draw from the business and pay yourself. Don't be like, I'm going to pay my electric bill with this. Like, it gets too messy too quick. The other thing is just make sure that you keep things organized. Like, get a bookkeeper. I know, like, podcasting or whatever business it is, the sexy part of it is marketing, and we all want to spend money on marketing, but, throw a few bucks at a bookkeeper and keep things organized, and if it's not that, if you don't have to have that many transactions, then just keep it simple. You can do an Excel spreadsheet or, do it in Google Sheets or whatever. But as long as you have your separate business bank account, separate business credit card accounts, then it can actually be quite easy to keep your own books. Just, but make sure that you are looking at all of the income that's coming in. So for podcasters, we have, like I mentioned, like a Patreon account or like Buy Me a Coffee or whatever those might be. We probably have a lot of affiliates that we are dealing with. So making sure that we declare all the income that comes from all the affiliates. And then understanding that, like, a lot of times with the affiliates, they might be paying us through Stripe. And so those type of accounts, what hits your banking account is the net of what you've earned. So it's after all the fees that they've taken out. So you want to make sure that you're declaring the actual income that you made and then the fees as a separate line item. Super easy to find. You just go onto the website and you can get that information from that. Now, if you are operating in different cities, like if you're going out of state, just be aware that there could be ramifications with tax. I mean, as a podcaster, I'm not, I don't know if you're like a traveling podcaster or something and you're doing other kind of business, like you're a coach there. I don't know. You just be aware that wherever you plant your feet, there might be tax implications associated with that. So, talk to a professional about that. Now, if you are a podcaster that hires, decides to have employees, well, contractors in other states, they're, easier to take care of because you can just give them a 1099 at the end of the year. And that's for anything that's $600 or above. So like if you have an editor for your podcast, just be aware that you're going to have to give them a 1099 to be compliant. And then as far as employees, if you start to hire employees, we live in a virtual world, but if you start hiring people in other states and they're an employee, you might be subject to tax in that state. So it gives you what's considered nexus in that state. So just be aware of what the rules are. So you may find that even in this virtual world, it might be easier to hire locally because then you don't have to hire, so you don't have to file another tax return. And then if you are selling physical products through your podcast, like if you sell t-shirts or all that kind of stuff, I would work with a company that takes care of the sales tax and they take care of all of the inventory, because if you're holding inventory in whatever state you're in, like if you're doing something through like where they have to ship inventory and it's on you, then, and that inventory sits in a state that will make you have nexus in that state, you might have to file in that state. So there's a lot of nuances. So just be aware anytime that you have things happening in other states that you might be subject to tax. So just so easy hanging fruit is just be aware what's going on in your business.
Right.
Hopefully that helps a little bit.
What do you, I get a lot of questions when I'm helping new entrepreneurs about like, what can I actually write off? Like, do you have any, like, What are some baseline rules of like, okay, this is definitely a write-off, this is sketchy, and this is a no?
So the IRS, definitely has things that they flag. Like, I've been in classes for CPAs where they'll tell you, like, these are the things the IRS is looking for, and mileage is definitely one of them. So if you're feeling like you have to drive around, I mean, we're in this virtual world now, but there may have been a time when you had to drive to interview somebody, right? So if you are claiming miles, just make sure that you're tracking them really well and that they are associated with business. And you have to track not only your business miles, but your regular miles. So I always have my clients get apps that will track that kind of stuff because it's just easier. And then you can, download the information at the end of the year, and it does like GPS type of stuff. So that's one thing they look for. Travel would be another one. So if you're like, I'm a podcaster and I'm a blogger and I like, my whole thing is travel and I don't really make any money from it, but I'm calling it a business. Like, you got to be very careful about that. So, travel is another one, but it could be legit. And if it is legit, track those types of things. As far as like, now I mentioned like a hobby versus a business. So this is like a really important thing because the IRS one of the things that they really will look at is, do you have a business or is this a hobby? Now you can make money and it can still be considered a hobby. So, if we are podcasters, we might have a coaching business on the side that we use the podcast to support that, or maybe the podcast came first. It's like a chicken and the egg kind of thing. Like we have a podcast first, then we become a coach, and then we have a business around that. But if you're just a podcaster and you're, just making a little bit of affiliate money, yeah, you got to claim that, but you may not be a business in the eyes of the IRS. And why this is important is because they have these things called hobby laws. And if you're considered a hobby, then you have to declare all the income, but you can't deduct the expenses. So it's super important that you set yourself up to appear like give the smell test that you are a business. So really important. Get an EIN, file yourself, if you as an LLC, have a bank account, do all the things that looks like you're a legit business and treat it like a business, just like you're saying, build it like a business, build it like a business. So if you go into this with the intention of building a business, treat it like that. Don't be like, where's that receipt I had? Like I bought a Yeti. What is it? The Blue Yeti or whatever. So, but if you are like a podcaster that's like DIYing it in the beginning and you're buying all this equipment and you're not making money at first, compile all that information, all those things, and then you could always have it as write it off later as, because you can have money that you're building up the business. And then, because it takes money to build up a business, so you can write it off later. So just, accumulate those things. And then when you start making money, you can start the actual business.
Yes. Another point of like starting the actual business is software, like bookkeeping software, tax software. Do you have any recommendations around like good, non-confusing stuff for starters? Are you a QuickBooks kind of a person, or do you got anything else that we should look at?
So my theory is keep it simple because if you don't have a lot of transactions, then I think Excel is completely fine. But once you start getting into this, like maybe you're like getting money through Kajabi and then Squarespace and like all these different places, like, okay, that starts to get a little bit more complicated. So you may want to get a bookkeeper at that point. I personally like QuickBooks. They're not paying me to say that. I just like them. Wave and FreshBooks are okay, but there's some limitations with the software. And my biggest my biggest beef with this, and I've said this before, is that a lot of these software companies, their whole thing is like, it's so easy to use this, and then people go in there thinking like, oh, I don't need a bookkeeper. I can just do this stuff myself. They start producing invoices and doing all these things. And it's like, and accepting payments, but they don't know how everything links together. And the whole thing about accounting is there's two sides, it's debits and credits. And so they may not be knowing what the other side of that transaction really is, and they could just make a huge mess. So where you think you're saving money by not getting a bookkeeper, when it comes to tax time and someone's looking at your books, they're like, whoa, this is jacked up. This is going to cost you a lot of money to get this unraveled. And believe me, that's like a lot of times that people come to me, it's like, I just have to like unravel this stuff. So, and it takes way more time to unravel it. So
And it's more expensive.
yeah.
Let's talk about that a little bit. Like, I feel like a lot of people have those funny stories when they walk into their accountant's office and they just see manila folders everywhere and they're like, oh my God. But I'm sure accountants have those moments too when there are certain people that are dream clients when everything is very well organized and it's like, it takes 50 minutes to knock this out. And then they're the ones with receipts falling out of their pockets and, all that. But how would you define a dream tax client versus a nightmare tax client? I'm interested in this. Because I want to be that when it comes to taxes, I want to be that easy dream client because then there's less chance of mistakes happening and, less expensive, hopefully. So let's map that out a little bit.
Yeah. Okay. So be organized as possible. Have good books, clean books, keep your receipts, make sure that you're not claiming like sketchy things. Like don't be like claiming all kinds of meals when they're not really like they're business meals. Like make sure that you have all of your mileage. That's super important. And then anything that like happens that may have a tax consequence, just have it prepared in with your papers. Like just keep things organized. Like if you're thinking like, oh yeah, I had this deduction or whatever, just put the receipt in there. Like if you bought an expensive piece of equipment that we might have to depreciate or something, have the receipt. Like I want to know what day you bought this so I can depreciate it. Those types of things. The messy people are the ones that they think that they know what they're doing and they don't. I work with lots of creatives. So, creatives go into business for a passion that they have. They may not be a numbers person, but again, they get cheap. I'm cheap. I don't want to pay people to do work that I can do myself, but thinking that you're doing the books right and you're not, maybe work with a bookkeeper to kind of get you on the right path and kind of show you the ropes. That might be a better way to do it. And then you can take it over. But the nightmare ones are the ones that like start SCorps and they have no idea what they're doing. They didn't even know they were supposed to take payroll. They don't know that they're supposed to reimburse themselves for things. And it just can be just a nightmare. So, and then, if you want to do things like have a retirement fund, which is super important, just understand like what you're doing. Don't be like at the last minute trying to open one up so you can save some tax. Like work with a financial advisor like well in advance before your tax time comes up and set things in place, and then when I go to do your tax return, I can be like, hey, you can actually put this much more money into that account. And now you have it set up so we can reduce your taxes by, I can let you know how much you can reduce your taxes now, as long as you have that set up. So work with a financial advisor. That's a good thing. Yeah, that answers your question, right?
Yeah, and I would say to anybody out there, like learning just some basic stuff is going to help you a lot. Like I'm a big fan of the Choose FI podcast. They're a financial independence podcast. One of the hosts, Brad, is a former accountant, and he talks tax stuff a lot. And just like end of year, around April, he's like, all right, here's just some things to look out for. And just having basic knowledge, because accountants, God love them, we are slamming them with a whole bunch of numbers, a whole lot of papers, a whole lot of receipts, a whole lot of people over and over in a very short, condensed period of time. Mistakes will happen. A couple of years ago, my accountant that I love, and he's a family friend and whatever, I in my head, I always run a projection. I'm like, I think it's like a little game for me. I'm like, here's what I think I'm going to get back, or here's what I think I owe. And I see how close I can get. I like to nerd out over numbers. I can't help it. And I go in thinking like, I'm probably gonna get a couple grand back. This is going to be nice. And I go in and he comes back like, oh, you owe like $15,000. And I was like, what? And like, that's way off. So I'm like racking my brain. I'm going back through it. And then like I said, I love and trust this guy, but people do make mistakes. And I go, hey, did you apply my quarterly payments? And he goes back through and he goes, oops. So I had made quarterly payments and he had forgot to put those in. And that went from me owing 15,000 to me getting like $12,000 back. So that's like a $30,000 swing. So having some basic knowledge, understanding just a little bit about what's happening on, just so you can double check, and that'll make you a better tax and accounting client as well. So lesson learned there. And now I have like these nice and neat little over summaries of each of my LLCs. Like, here are all the itemized things. Here's the contributions I made to my IRA and my 401k and all. Like, it's all just mapped out, and I double check it. And after we're done, we go back through and review that. Hey, did you apply this? Okay, cool. So like little things like that.
Yeah, and don't bombard your accountant with like tons of emails, like back and forth, like, oh, I have this deduction, and then you just put it in one random email that like might get lost. So you keep it organized. As you know, if you love spreadsheets, I love spreadsheets. You can just put it on another tab and just put all that detail on there. Now, I do want to address the estimated tax payments, because that's something that people always forget about. So if you're making money, Uncle Sam is going to want a piece of the action. So just be prepared. You know, it's based on the year before. So if you file and your tax preparer gives you estimated tax payments, please, you know, make those. You can just set them up. And if you start making way more money than you did the year before, you probably want to talk to your accountant and have them readjust it, and maybe do like an analysis to see if you owe a little bit more. You should, because you don't want to be like struck with this like, oh my, you know, oh, that's hits the fan kind of moment, you know, like, like, oh my God, I don't have that kind of money. And so if being prepared, you know, like if you're doing your books, then at least you know what your net income is at all times, or be like, oh, okay, I really do need to amp up these estimated tax payments. And you know, I set mine up ahead of time. I have a IRS pin. You can go in and get yourself a pin to the IRS. And I love this because a lot of people don't even know about this. That's why I talk about it a lot, because they're like, they just go online and like pay with their credit card or whatever to the IRS, but you can go and set it up. You put in your EIN, then they mail you a pin, and then you can go in and set up all your estimated tax payments. And it's like, it's done through an ACH, and set it and forget it. I just love that. And instead of being scrambling at the last minute, you know, because people are always at the last minute. They're like, oh my God, I forgot my estimated tax payments, you know? So.
Yeah. And if there's anybody out there that's kind of stressing out about, well, how much do I need to save back for taxes and all this? One of my favorite all-time books is called Profit First. It's by Mike Michalowicz. He's got a very simple system. I've been using it for like 5 years now, where you set aside a certain percentage for your business expenses, a certain percentage for your owner paycheck, a certain percentage for like a little owner bonus, and then a certain percentage for taxes. And like every dollar that comes through, a certain percentage just goes into that tax payment account. And that way, to me, it's not some big hit. It's just pulling off that money I've already set aside for years for taxes anyway. And if I don't need to use it, I don't need to use it. Cool. But it's there. And that just gives me peace of mind. So if you all stress out about that, read that book. It's really good. Heather, do you have any other like tax or accounting based books if people want to kind of just get some foundational knowledge?
I do, you know, so foundational knowledge. Let me see. Let me look at my, so there's this one, it's called, I think her name is something Adams. Anyways, it's Money Smart Solopreneur. It's really basic information, but I just bought it so that I would have something to like, kind of show my clients. But it gives you sort of a basic idea of like little things that you need to know. And she's like the Money Girl podcast or something like that. But that's a good one, just to kind of get your feet wet and kind of understand the things that you may need to know. I do want to mention local tax. So depending on where you're at, you may have state tax, but you may also be subject to local tax. So I live in Oregon. We have transit tax where I live, and then I have some other local taxes that I'm subject to. So just really know what's going on in your state, what you might, you know, just go onto like the Department of Revenue and the Secretary of State website and kind of look at things and just educate yourself. I mean, that's the best thing you can do, is educate yourself and then talk to a professional that can kind of help you out. Because like if you're doing your taxes through TurboTax, like they'll never tell you about those local taxes that you owe. Like that's just not, at least for Oregon, I can say it's just not built into their system. So you could be actually owing things that you don't even know. So educate yourself.
Educate yourself. Well, let's talk a little bit about lowering our taxable income through some different vehicles. This is one of my favorite topics to nerd out on. I freaking love it because, again, what I didn't know really hurt me. Like several years ago, my gym business was really cranking, and I was just taking those extra profits and sticking them in just like open market investing. I had a Roth IRA since I've been investing in my Roth IRA and maxing it out since I was 21 years old. So for like the last 20 years, I've maxed that sucker out and it's done really well. But there are other things to look at. And now that I know about like a solo 401k and how that works, and traditional IRA versus a Roth IRA and health savings accounts, like these are all things that entrepreneurs can really make use of, to where like I have a solo 401k set up through Vanguard, and it's an index fund 401k. I just buy VTSAX with that. And last year I was able to max that out at $19,500. So that took $19,500 off of my tax liability, which was awesome, right? I don't have to, pay income tax on that money. I pay tax on the growth when I withdraw it out, after retirement. And same thing with a health savings account. We've got that set up now for my wife and myself, because we do open market insurance, and that makes the most sense for us and how we live our life. But like HSAs are super cool if it makes sense, because like this year, I think I can max it out at $7,300. Again, that lowers my taxable amount by that amount, and the growth isn't taxed either. And then when you use the money for qualified health spending, that's not taxed either. So like it never gets taxed, which is awesome. But any thoughts on just beginner steps of where we need to look at for lowering our tax bill through vehicles like that?
Yeah. So, like I mentioned, you want to talk to a financial advisor as far as like which one's probably going to be, the best vehicle to help you get where you need to be, depending on your age or the type of structure of the business that you have. But again, if you're set up like an SCorp, you get a lot more bang for your buck on that one. And I work with clients who they actually kind of max out their most of their pay through those retirement funds. So they're not necessarily taking all of that as wages. They're maximizing what they can to make their tax bill way less. So there are some great vehicles that you can do. Then, like you mentioned, the HSA, also getting healthcare through your business, that deducts it. And then just other things as far as like deductions go, just, see like if there's any credits that you might be able to apply for. Depends on, could depend on industry. It could be local type things. And then there's, when you were talking though, I did want to, it went into my brain about, digital currency and Bitcoin and all of that
Crypto,
kind of stuff. Yeah. And, I do want to just mention that there is going to be a lot more scrutiny on that. So if that's part of your, retirement or whatever you're doing with that, just understand that there is a box now on the tax return that you have to check that you have been involved in that. So right now, I mean, the IRS is probably having a hard time, and there's not a lot of guidance for us as accountants on how to deal with that kind of stuff. But just know if that's part of like your plan, just be aware that extra careful, eyes on how you're going to declare that. And I mean, it can get, if you're trading or you're getting those interest payments type things, and it's like each one of those is now a transaction, it can get really complicated really fast. So, so if you don't want that complexity, maybe invest in things like mutual funds or something, but talk to a financial advisor about the best thing to do. And, let's see. I'm trying to think of some other things.
529Ks. We do that for our kids. If you have children that eventually might go to college, I think we use College Choice Advisor 529K for, but I get to, in Indiana, we get a 20% tax credit up to $1,000 for, so I can invest $5,000 a year in my kids' education fund, and I can take a $1,000 tax credit, not a tax deduction. So that's even better, because whatever my tax bill is, we just take $1,000 off of that. It's like the child tax credit. That's not a deduction. That's money off of your final tax bill. Which, can you explain that real quick? Because I feel like I didn't understand the difference between a credit and a deduction until last year. And I feel like this is important.
Yeah, so deduction will help you reduce your adjusted gross income on the front side, and then the credits can actually reduce your tax. So that and credits sometimes are either use it or lose it, or you can get money back. So it's a it's a really cool. Credits are better than deductions
Yes.
most of the time, I would say. One other thing, I mean, you mentioned your kids. Like if you can hire your kids, that's another way of reducing your taxes. So um, there's certain thresholds, and I don't have anybody doing this right now, so I don't remember what the thresholds are. But you don't have to pay them all of the tax, so it's cool. So if you want to give your kids some jobs around the house, have them help you edit your podcast, you can
Yep.
pay them for that and reduce your tax bill. So um,
Yes, that's something I'm very interested in because I'm going to eventually launch a show with my son, Henry, and have him be a part of the editing process so that he learns how to edit so I can pay him to edit my show. And it's just, cool skills for kids and learn tech and learn about audio production and things like that. Um, what about this is going into the weeds a little bit, but it's going to serve me, so that's a-okay with me. What about like pushing most of that into like a Roth IRA or something like that? At what point can I set that up for my kid? Do they have to make a certain amount of income? I know that you can't invest more than what they make. So if he earns $3,000 in 1 year, I can't stick $6,000 in a Roth IRA for him. But any other guidance around Roth IRAs for kids?
you know what? I honestly I don't know offhand. So I would, educate yourself and talk to a financial advisor about that. But I most of the people I work with don't have kids. so, so I'm not up with all of that actually. But yeah. So and that's the thing. Like if you're gonna work with a CPA that if you've got certain types of things that are their wheelhouse, work with them. Like that's just not my wheelhouse. I don't deal with kids.
She doesn't deal with kids. I have to. I've got them. I got them. So, like, when this episode comes out, it'll be about a month before taxes are due. People are scrambling. They're trying to get their act together. I mean, is there like let's say somebody wants to make some moves to possibly reduce their taxable income now? Is that a thing? Can somebody do something in this last month to reduce their taxable amount at this point, or is it too late?
Well, if they have those retirement funds set up, they could certainly put more money into those. So, like a Roth, that doesn't reduce your taxable income because you put the money in now, it's already been taxed the
Yep.
money. And so it grows and then you don't pay tax on that. But you have to make under a certain amount, otherwise you can't contribute to the Roth anyways. But and if you hardly make any money and you contribute to the Roth, there is like a little they give you a little spiff, but you have to fit within a income frame to get that little spiff. But uh but otherwise, like if you have like a solo 401k, a SEP, like you have some time to put more money into it. So talk to your tax provider and be like, okay, um, let them know how much you can afford to put into it, and they can just plug in the numbers and tell you how much it's going to reduce your tax, and you can decide like, is that something I want to bother to do or not? I mean, that's a great vehicle for saving tax. And then that's the thing. It's like after the fact. So really you want to be as proactive as you can with taxes, rather than being reactive. So
Yep.
put things in place, now for next year. But yeah, if you have a retirement fund, it's not too late.
Yes. Yeah. With my solo 401k, what I usually do is I max it out as the individual contributor, but I can contribute as the business as well, which is awesome. But that's when I go to my accountant and go, all right, here's what we made, because it's all dependent on how much money comes in. And I don't understand that to that point. And he goes, okay, you can put this amount in, but that doesn't have to happen in the calendar tax year. That can happen up until April when you file the taxes. So
Yeah.
yeah, so that's a nice little vehicle to have. All right, let's bring it full circle here, Heather. I want to know, if you had to start your podcast all over again, would you do anything differently? Would you, look at it a little bit differently? Would you change a few things on how you launched? Because I know there's a lot of people that are, they're just getting started here, and we don't want them to make mistakes like you and I made when we launched. So anything that you do differently with your podcasting launch specifically?
Well, I don't think Clubhouse was around when I launched my podcast. So I would definitely go on to Clubhouse and learn from the experts and get to know them, get to know someone like Adam or Adam specifically, and not try to do this stuff and avoid by yourself. I was just like, I didn't even I didn't know any podcasters when I started, and then you start to meet podcasters, and like I was recording through Zoom, just using one channel, and then a podcasting friend of mine was like, you can set that so that each person has their own channel, so that way if there's a problem with their sound you can fix it. I was like, you got to be kidding me. It's just a little check, it's a little button you check. Like I didn't even know that until like maybe 5 episodes in. So that and then keep it as organized as possible. So I love to organize things. And so at first I was using a spreadsheet, and then I discovered Notion, which is a great software that you can, I think ClickUp might be similar to Notion, but you can embed, like it's, oh my God. So it's like a spreadsheet that you can embed more things inside of it. And so just keep it organized, because you think like, oh, 5 episodes in, you're like, oh, this is easy. But you got to keep track of headshots and release forms. And did you do the show notes yet? Did you send it to the editor? Like there's so many steps involved in a podcast. So especially when you edit a podcast that you want to be able to have all your processes in place. And then if you can bring on someone to help you, now you've got it all organized, they can just jump right in and help you. So get it organized. I'm always going to say that about anything, but keep it organized, get to know people, pick their brains. Don't try to do it alone. And, I mean, at first I listened to like Pat Flynn and John Lee Dumas, and they've got their checklists that are great. You download those, but it's checklists, in a void is not enough. You really need to actually like meet people and talk to them. And, it's just like their one suggestion for a microphone may not be the suggestion that you need, like that sort of thing. So.
Truth. Well put there, Heather. All right. As we wrap up, I'm hope that we actually, I'm sure there are a few people out there that are like, I probably should contact Heather. Maybe I need her help. Maybe you just want to listen to Heather's show, get plugged into her world a little bit. Where are people going? Where do we need to send them to get into the world of Heather Zeitzwolfe?
Sure. So the easiest way is to find me on Linktree at Get the Balance Right. There's also my website, which is called getthebalanceright.net. And if you found this information interesting, I do have a free download where you can keep track of your numbers. I've got some links in there. I've got some calculators. Like it even has like some ability to do some of that profit first kind of stuff in there.
Nice.
So you can put in percentages that you want to be at and all of that good stuff. So that is at Get the Balance Right podcast.com/pod and the pod is for plan, organize, and declare. And it's got more of that information in there. And just keep in mind that like today has been, given some information, but, educate yourself, seek out a professional, a lawyer, an accountant that knows your unique situation, because I'm just putting like a broad brush on this whole thing. So, don't hold me liable, and tax law is constantly changing. And so like, when I have a hesitation to answer something, I'm like, oh my God. If you ever looked at the book of tax code, it's like, it's enormous. So like keeping that in my head is like, no. So yeah, I don't pretend I have all the facts. So educate yourself.
I read a lot of books. That's one I will never read. The Book of Tax Code. No thanks.
If you have trouble falling asleep, that is the ticket. Like if you got insomnia, get out the tax code and start reading that. Woo! By page 2, you'll be asleep.
Or if you need one of those really thick books to like cut out and insert and hide your weapons in or something.
Oh yeah,
that would probably work.
Yep.
Like
or
Dwight Schrute.
You need a door stop. Oh, yeah, like you need a big door stop. Yeah, the tax code.
Excellent. Well, Heather, I've been excited about this one. I've never been able to nerd out on taxes like I fully wanted to on this show, and this allowed me to do that. I love this topic. It's very important. and people can learn to love it like I have, and it's been very beneficial. So, Heather, I appreciate you for kicking some knowledge and helping some people save some tax dollars here today.
Yeah, hopefully they do. Yeah, and yeah, just make sure track everything.
Track everything. All right, Pod Pals, lots to think about. Hit up Heather on social media. Get into her world. She's very fun. She is the most energetic and vibrant accountant I've ever met. She's not your typical accountant. I'll just put it that way. She's awesome, and she gave you a lot to think about. And just getting the foundation in place, getting the balance right, in fact, can be achievable. So don't stress out about taxes. Let's get them done. Let's get them organized. Let's get them in. And if you are one of those people that's really struggling with this concept and stressing out about it, get better. Make the next year, like maybe this year is kind of screwed up. All right, go take your pile of receipts in, but just go, this is the last time this ever happens. It will not be like this ever again. That's what I had to do with my own situation. You get your shit together and you move forward in a more organized and better overall fashion. So that's my challenge to you, Pod Pals. All right, we are going to wrap this up. As always, I'm going to send you out into the world wishing you health, happiness, and many tax write-offs and many downloads. We'll see you next time.